The 3 worst tax mistakes. Follow my video and I'll explain all. If you haven't yet, click the bell and subscribe to be notified every time we produce our best pieces of content. Tax season is looming. We're also going through a bit of a strange time at the minute where businesses are finding it hard. So make sure that you don't fall into these tax traps and kill your profitability. Number 1, not taking advantage of pension schemes. Now, if you've got excess profits within your business that you're not looking to directly invest in, so this may not be as applicable to a startup or a really fast scaling business, but pensions are a massive opportunity. Now, when you go above £50,000 as a business owner, you jump up in tax by another 25% from what you were paying before. That's a bit tough. And also, if you go above £100,000, you even get penalised even more. So it can be really crippling when you realise the amount of tax that you're paying above £100,000. Now, with a pension, you've got the opportunity to save tax. Now, corporation tax, if you earn profits above 200,000, is going up to 25%. Now, you've got the option to put money into a pension, and the money that is paid into a pension within your financial year reduces your tax down to 0 for that amount of pension that you contributed. Secondly, you're not paying any dividend tax on it as well. So you've got an opportunity to put a big sum of money into a pot and allow that to grow. Now, if you're a higher rate taxpayer, you're saving 33% dividend tax, you're saving 19 or 25 corporation tax on entry. And you have then got the benefit of that money to watch that grow and grow and grow, which will help your wealth build and will help you towards retiring or to get to the stage of doing what you want when you want without any fear of money. So where the personal tax limits are higher, if you're above 50 grand, definitely above 100, paying your money from a company into a pension has never been more sexy from a tax saving point of view. So how much excess profits have you got within your business that you could then put into a pension that can save for your future and save a lot of tax? What's that figure for you? Claiming tax deductions on things that you just can't prove. So the classic is you haven't got your receipt and you can't claim back the VAT. But if you're claiming stuff that's just on willy-nilly, you've lost it, you haven't got the right information, or what you're doing is just downright illegal, this is a trap a lot of small business owners can fall into. Now, they may have an advisor that's contacted them out of the blue that's saying there's a tax boutique. It doesn't mean that they're right. And trust me, sometimes all that glitters is not gold. And what you've also got as well is Dave down the pub. So you've got to make sure that the advice that you're getting from Dave down the pub does not lead you into problems. Because if you can't prove stuff and you're investigated, you are going to get yourself in massive problems. And you won't just pay back the tax that you should have paid in the first place, there will be penalties and interest. And if you've done this knowingly, the penalties on this can be up to 200%. Now that is savage. The third worst tax mistake is not to get an advisor. Not all advisors can help you with everything. But ultimately, you want to have a really good handle on your business tax. You really want to have a great handle on your income tax. You want to have a great handle on your CGT, and you want a great handle on your inheritance tax. Now, I understand that a 35, 40-year-old entrepreneur will not be that excited about inheritance tax because they're just not there yet. But ultimately, what you want, if an advisor can sit there and do everything, happy days. But you want to make sure that the advisor that you've got is relevant for the things that you're doing now. So you want to have a really, if you're growing your business and you're building it, you want to make sure that you've got a really strong business advisor that's also an accountant that can also help you save tax. Because if you're building your business and you're making more profits, who wants that to disappear out of a big sieve where the sand goes through your fingers and it's all a waste of time? And also, if you're building assets, and we've got a lot of customers, including myself, that are really into property, who wants to pay excess capital gains tax? Nobody. We all want to pay the fair amount of tax that we should do, but no one wants to pay more than they need to. And make sure that all the assets that you're building on your personal balance sheet get you there, so you've got the wonderful retirement and live the life exactly what you need. But also, when you're transferring this over to your children, you are not getting walloped again with another 40% inheritance tax if you can avoid it and it's legal. So these are my 3 worst tax mistakes for small businesses. I hope you don't fall into any of the 3. But if you do and you could help with a chat, please click my link below. My Calendly link is there to book a discovery call. We can chat for up to 30 minutes. I promise I'll take on board any questions that you've got, and there will be no pushy sales pitch. And also, if you're looking to save tax in general, or you've got that feeling where you're not making the most of the opportunities, I've got a book below called 74 Ways to Pay Less Tax. How many of the 74 are you taking opportunities within your business, and how much of the ones that you're not taking, how much could you save every single year?